Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me today, and welcome to another episode of Reverse Mortgage Radio. Very glad you're here, because today we're going to be talking about this day in history. Well, not actually this day today, but April 27th, 2015. I just want to read a few of the top 10 headlines from AP and see if you remember any of these things. The number one headline on that day, April 27, 2015, was Earthquake Death Toll Rises Above 3,700 in Nepal. Number two was Baltimore Mayor Blames Outsiders for Protest Violence Ahead of Freddie Gray's Funeral. The third one was Clinton Foundation Concedes it, quote-unquote, made mistakes on disclosing donations. And then we skip down a ways. They have here, number 7 was Islamist fighters capture Syrian army base. Number 8 was Kazakhstan's president heads to 5th term. Who cares about this stuff? And these are headlines on this day. Number 9, you might remember this one, hopefully. Colorado Cinema Massacre trial set to start. Number 10, Cavaliers and Wizards advance with 4-0 sweeps in NBA playoffs. But they left the most important headline, as far as I'm concerned, completely off the list. You know what that would be? The reverse mortgage financial assessment begins. Yep. April 27, 2015, the Home Equity Conversion Mortgage, which is the FHA's name for their reverse mortgage program, began to conduct financial assessments on their borrowers. Now, what the heck is financial assessment? And what's the big deal, right? This has been going on now 9.5 years. We're coming up on 9.5 years of having financial assessment. And I don't know if you remember back in the day, in 2008, 9, 10 especially, reverse mortgages really got a black eye because a lot of them were foreclosed upon. People either passed away and more was owed on the house than it was worth, or a lot of people failed to pay their property taxes and homeowners insurance. They failed to keep up on the requirements for the FHA reverse mortgage program. Because, well, let's just back up a minute. Real quick, I want to explain what a reverse mortgage is. For most of the time, it is an FHA insured loan. FHA stands for Federal Housing Administration. So it's insured by the federal government. It's not a loan from the federal government. You're not getting a federal handout. It has nothing really to do with the government other than they set the rules that we have to play by. So it's an FHA insured reverse mortgage or a loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can then spend. You've heard me say it before. If you've ever listened to this show, you cannot spend the equity in your home unless you convert it to cash first. And really, there's only 3 ways to do that. You can sell your house, and you got this big pile of money. You can spend it all. Of course, you're going to end up spending part of it on some housing at least, because you have to have a place to live, whether it's rent or buying a new house, whatever. You could also get a new loan with a new mortgage payment, a HELOC, a regular traditional mortgage, whatever the case may be. Or you could do a reverse mortgage, because a reverse mortgage allows you to convert a portion of the value of your home into cash without requiring a monthly mortgage payment. Mortgage payments are optional. A lot of people, more and more people, I should say, not a lot, but more and more people are opting to make payments on these loans. Number one is because interest is higher, and some people don't like the interest accruing on the loan. Because since you're not making payments on this loan, and it's not a free loan, it's no free money here, you're still charged interest every month. That interest gets added to the loan balance on a monthly basis, and it grows over time. If you're not comfortable when you look at your mortgage statement, if looking at that statement causes you more stress than the benefits that you get by having the reverse mortgage, you shouldn't do the reverse mortgage to begin with. And any lender that does not explain how that negative amortization works, negative amortization is just a silver dollar word or two silver dollar words for the loan balance getting larger instead of smaller over time. But if you're not comfortable with that, don't do it. And if somebody downplays the importance of that, or they act like they don't want to talk about it from a lender's standpoint, you should run. Don't do business with that person. Do business with me, because I'll make sure you understand it. Knock on wood. In 21 years of doing this business, I've never had a customer or a family member call me and tell me that they've regretted doing this loan. And I do not want you to be the first, because that's the way the loan is designed to work. It accrues interest over time. If you borrow $100,000 today, 10 years from now, you might owe $200,000 or $250,000, whatever, depending on what the interest rate is. So you've got to be okay with that. Now, odds are, because we're not loaning 70 or 80 or 90% of the value, back in the day before before 2009, when they started changing the rules, we would loan 60 or 70% of the value to people, sometimes 80% if you were older. But now that is not the case at all. We loan typically between 33% of the value to about 60% of the value. In order to get 60%, though, you've got to be well into your mid-90s. If you want to get half the value of your home, 50% of the value, you need to be about 84 years old right now, given what the rates are today. Because the way FHA calculates how much we can loan, they dictate to us, the lender, how much we can loan. And the way they calculate it is it's based on the age of the younger homeowner, the value of the home, and the interest rate. So the older you are, the more money we can loan as a percentage of the value of the home. The lower the interest rate is, the more money we can loan as a percentage of the value of the home. Right now, the downside is interest rates have gone up. Now, they may come down a little bit, but don't count on a huge drop in rates coming. If they come down at all this year, they might come down a quarter point. I mean, we got some news recently about unemployment ticking up a little bit. The first-time unemployment claims are a little higher. And the sad thing is the Federal Reserve looks at that as good news. Yeah, the economy's slowing because more and more people are unemployed. It's a convoluted system we live in here. But that's the rules that we play by. All right, let's talk about financial assessment. But before we do that, I do want to let you know how you can contact me with any questions you have about reverse mortgages. If you don't think you'll qualify, call me. You might. I can talk to you. Or I can explain how maybe you can a year, 2 years, 5 years down the road. Because I do loans for people that I talked to 3, 4, 5 years ago sometimes. They'll call me today and say, hey, I'm ready to do it now. In fact, just this week, I got a call from 2 people. One of them I talked to a year ago. And he's like, yeah, I'm ready to move forward. And another one I talked to about 3 months ago said, hey, okay, I want to get going on this now. So a lot of people take some time to decide, and I don't pressure you. I'm not going to tell you have to decide by the end of the month, or because this is a special sale, apply now, or before rates run out. No, that's not the way this loan program works. So let's talk about it, because financial assessment is an important aspect of reverse mortgages. We have to make sure that you can afford to stay in your home, that this is a sustainable solution. But you know what? Right now, I'm hopefully going to be closing the loan for that guy that called me back a year ago or last year, and now he's calling me back just this week. The problem is he's self-employed and he's not claiming Social Security yet, and he doesn't claim any income. But luckily, he's got other assets, cash assets, and we can count that as if it were income in his situation. And so hopefully we can qualify him. But let's back up and talk about what financial assessment is. So on April 27th, 2015 is when it became effective. And basically, financial assessment requires lenders to assess a borrower's credit history, property charge history, and monthly residual income. And this was, like I said, a big change because the industry before that, we had basically two questions. How old are you and how much equity do you have? If you were old enough and you had enough equity, you qualified. It was that simple. If we could loan you enough money to pay off your existing mortgage and you were old enough, boom, the loan was going to go through, unless you had some lien on your title or something like that. But now it's become more mainstream. The reverse mortgage is more like a conventional loan in that respect. So according to the regulations, though, the lender has to evaluate what's called the willingness and capacity of homeowners. So the capacity is your ability to keep up on your current taxes and insurance. You have enough income. The willingness, that's your credit report. Now I know some people say, well, I wanted to pay my bills, I just couldn't because I was unemployed, or I couldn't because I got injured in a car wreck. Whatever the case, I got divorced and there was issues, whatever the case may be. But that's the way the wording that the government uses. And they also say you have to maintain the property. So it's a property charge history. That's part of the willingness, if you will. Property charge history includes any loans against the home. If you've got a first mortgage and a home equity line of credit, those have to be paid on time. Your property taxes, your homeowner's insurance, you hear me say it all the time. You've got to keep current on your property taxes and insurance, and you've got to pay your homeowners association dues or any other bills associated with the property. Things like that. That's property charge history, and we check all of that. Unlike a conventional mortgage, we do a 2-year look back on your HOA payment history. I remember, 25 years ago, I was struggling. I was really struggling, and I was in the finance world, but I wasn't in mortgages yet. And I knew that if I didn't pay my mortgage, all heck was going to break loose, and I had to make sure I did that. But one thing I could let go because they didn't report to credit bureaus was the HOA, the Homeowners Association. I remember I had little kids at the time, and the pool was part of the HOA dues. And we had to tell the kids that, no, we're not going to go swimming right now. We don't want to. We don't want you to go swimming. But the real reason was we didn't keep up on our HOA dues. We were behind, and they wouldn't give us a pool pass because we were behind. But if I had tried to get a reverse mortgage at that time, I would have had trouble because I was so far behind on HOA dues. So we look at all that stuff now. And if you pay your property taxes and insurance on your own, and your property taxes, which are due in February and June, if you paid them, say, in May for the first half and August in the second half, well, that's going to need some explanation. Like Ricky telling Lucy, you got some splaining to do, right? That's what we're going to say to you. Not quite that way. But anyways, by the way, if you do want to talk to me, please feel free to call me. You can reach me directly at 303-467-7821. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage right here in Denver. And again, the number is 303-467-7821. I'd love to talk with you about your specific situation, whether you've had credit issues or not. It's irrelevant because I will explain the program to you, how it works. I can run numbers for your specific situation. You can also go to my website at reversemortgageradio.net, reversemortgageradio.net. And my radio show this weekend will be up on my website next week. Usually it's around the middle of the week or so. But you can go there and download the radio show or just listen to it online. And you can also download my consumer guide. I've got a reverse mortgage consumer guide that's on there. Download that, read it. It'll answer a lot of your questions. And anything it doesn't answer, email me, call me, whatever. I'd love to talk with you. So back to the financial assessment. Again, we're talking about the willingness at this point, what we look for in your credit. If you've had a few slow payments, that's not the end of the world, okay? On your credit cards or even your mortgage. It can create some extra work, but it doesn't mean we cannot help you. When an underwriter is looking at your file and there are some late payments, we always have to have letters of explanation and preferably documentation to back it up. Let's say you were 3 times 30 days late on your mortgage in the last 2 years. That's going to cause a little problem. But let's say that your spouse was in the hospital and you had extra medical bills, or you were in the hospital and you were relying on your work income at that time, but you couldn't work, and you weren't receiving Social Security until, then you got out of the hospital and you couldn't work, so you started Social Security, but it took 60 days to get, whatever the case may be. We want to see verification of that. So we might ask for a medical bill to show that you were in the hospital at that time period. Or we might, whatever the case may be, that's just an example. Things like that. The better documentation you have, the easier it is to get you qualified. Now, just because, let's say that you don't have any excuses like that, we may still approve the loan at the same rate. We don't jack the rate up on you because you were slow on things. That's one difference between a conventional mortgage and a reverse mortgage. But what we will do, or could do, I guess, is we could say we need to pay your taxes and insurance for you on your behalf. Most of the time, customers with reverse mortgages pay their own property taxes and insurance. But in some cases where you've got poor credit, a poor payment history or something, we need to pay it for you because we can't trust that you're going to pay it, especially if you've had a mortgage payment that escrowed your taxes and insurance for the last 30 years. Now, you're not used to paying your taxes and insurance, and if you've got a poor payment history, the issue is you may not pay them. And if you do not pay your property taxes and insurance, you could be foreclosed on. And we do not want to do that, okay? Regardless of what people say about big banks and things like that. Well, there are no big banks in reverse mortgages anymore. But we do not want to foreclose on you. We want this to be a sustainable solution that's going to last you as long as you live in the home. But what we have to do, since you're not sending us any money to pay your taxes and insurance like a conventional mortgage, we have to take it away from the loan proceeds. Let's say you're 65 years old. Well, you might live in the home another 20 years. What we have to do is we have to calculate how much your property taxes and insurance are every year, multiply it times 120%, and then times 20 years. That could be $50,000, $60,000, $100,000 or more that we have to take away. So let's say, for example, you've got a $500,000 home. You have a $100,000 mortgage. We can only loan you, say, $200,000 on your reverse mortgage, on the new reverse mortgage. We have to take the first $100,000 to pay off your existing mortgage, and then we may have to set aside $80,000 to pay your property taxes and insurance for the next 20 years. Well, in that case, you're only going to get about $20,000. You're like, well, why would I do a reverse mortgage if I'm only going to get $20,000? Because you're getting out from under the principal and interest payment of your mortgage. Let's say that's $1,200, and let's say your taxes and insurance are another $400. That's like $1,600 a year. A month. And what is that like? That's like a lot of money over the course of the year. I don't know. It's whatever it works out to be, about $18,000 or more, $20,000 over the course of the year that you're saving every year. So keep that in mind. That's why people do a reverse mortgage, even in situations like that. But the problem comes into play. Let's say you owe $180,000 on a mortgage, and we can loan you $200,000. But then we have to set aside $80,000 for a reverse mortgage or for your taxes and insurance. Now you only have $120,000 available, but you owe $180,000, and we can't help you out. And that stinks when that happens, but it does happen from time to time. The other thing is the income. Like I said, the nice thing is with reverse mortgages is we could be a little more flexible on income than they can in the forward world. I mentioned the guy who's self-employed who doesn't report any income on his on his income taxes. In that situation, though, he's got a lot of money set aside in cash, in CDs and savings and things like that. And so what we do is we take that money. We don't take it physically, but on paper, we say, okay, he's going to live in the house, another 22 years. We divide that money by 22 years and calculate what that monthly income would be. Then we can also take the loan proceeds. He owns his home free and clear. So we're able to give him, $200,000 or whatever it is. And we use that money and we say, okay, with that money, if we dissipate that over the next 22 years, that adds more income, even though he's not actually taking it as income. And it's very, very a good way to get people approved who may have very small Social Security. Let's say there's a woman who was a housewife most of her life, and her husband didn't make a lot of money, and now he's gone, and she's on receiving his Social Security that's like $1,200 a month. That's next to impossible to live on. But when we calculate the proceeds from the reverse mortgage, we can add that to her income and qualify her and help her to live a better lifestyle. That's one of the beauties of this loan program. And that's the capacity aspect of the income. So we have to show the way we calculate that you have enough income is we use something called residual income. If you've ever heard somebody talk about debt ratios, that's what the regular mortgage world looks at. They look at your gross income and they say your mortgage payment should not be more than, 28% or something of your gross income. And when they factor in all the bills, it should not be more than 38% or 40%. I don't know what the calculations are because I haven't done a regular conventional loan. I think I did 2 in 2012. And before that, it was 2003. So I don't know what I'm talking about when it comes to conventional loans. But with reverse mortgages, we use net income. We look at your net income and we subtract from that income your expenses. Let's say your net income is $2,200 from Social Security, and your property taxes and insurance combined are $350 a month, and all of your other expenses are another $600. So we take that $950 total expenses and subtract it from the $2,200, and now you've got, what is that, $1,250 that's left over. If you're a single person in Colorado living by yourself, we have to show that you have $589 left over. If you're a couple, 2 people in the household, then you have to have $998 left over. And so it's a lot more flexible is the point I'm getting at. And then especially if we can add loan proceeds, even if we're paying off a mortgage. Let's say we have to pay off a mortgage and you only have $50,000 left. And we dissipate that over the next 8, 10, 12, 15 years, it can add $100, $300, $400 extra a month and qualify you, even when your money is tight. So even if you don't think that we can approve you, it's possible that we can. We do have to verify credit on everybody. So I have to, when you apply for a loan, with me, or you call me and say, hey, I want to look into a reverse mortgage, I'm not going to ask you for your social security number at that time. A lot of people will. Do not. I'm going to tell you this. Do not give out your social security number when you're shopping for a reverse mortgage. The lender does not need it to give you a quote. They do not need it. They can ask you, do you have good credit? People know whether or not they have good credit. You know whether you pay your bills on time or not. Most people are pretty accurate about their credit. A lot of people are like, yeah, my credit's 820. They're very proud of it. Other people may say, yeah, my credit's terrible. In those situations, we say, okay, well, this is the way it has to be. Now, it's possible that maybe it's not as bad as you think, because if you've been paying your credit cards 15 days late, that doesn't report on a credit bureau until it's 30 days late. But you don't need to give your social security out to anybody until you're ready to do business with that company. What I do is I tell you, okay, here's the quotes and here's the numbers and all this stuff. And I meet with you and we go over everything. You say, okay, yeah, this looks good. I want to move forward. I say, okay, here's a list of documents that I'm going to need from you. Here's the list of counselors. You need to call one of them and get the counseling done. That's somebody that's approved by HUD. It's an independent third party approved by HUD. And they want to make sure you understand your obligations with the reverse mortgage and that you understand what you're doing, that the loan balance is going to get larger over time, and that you are planning on staying in your home or whatever the case may be. They just want to make sure everything's on the up and up, right? But then once we have the counseling, you have the counseling certificate, then you call me and say, hey, I've got the counseling certificate. I'm ready to do it now. At that time, I will ask you for your social security number, because we will have to verify your credit at that time. I'll have to pull credit. And we do what's called a tri-bureau merge. We pull all three bureaus. If you've got a freeze or a lock on all three bureaus, you get to unfreeze or unlock all three bureaus. And some people, it can be a challenge for that. They don't remember the passwords, or they don't remember where they set the paperwork that has the password information on it. I've had it sometimes take people 2, 3, 4 days to try to unlock their credit. But it's worth it. Then they unlock it for a day. I pull the credit and boom, that's it. Then we can sign the application. And typically from the date you sign the application to the date of closing takes about a month. I'm getting off topic here, but just to explain real quick how that works. And then I do have to get verification of your income for Social Security, or if you work, we need pay stubs and all that stuff. But however we go forward with this, please feel free to call me. That's where it starts, gathering the information. My name is Bruce Simmons. You can reach me directly at 303-467-7821. That's my direct line, 303-467-7821. Or visit me online at reversemortgageradio.net. reversemortgageradio.net is my website. You can download my consumer guide, my free consumer guide right there. You can also download the radio show. Next week it'll be posted on my website, and it's in the upper right-hand corner. Just click Reverse Mortgage Radio Show. Thank you so much for listening to me today, and I hope you have a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.